It was a big day for Indian markets. The indices closed flat, but not before setting a new record. The Indian stock market has hit $5 trillion. It's a very important feat. Only 4 stock markets have reached this figure: Hong Kong, China, the US and Japan. So India is the 5th to reach here. But what does this 5 trillion stand for? It's market capitalization, basically the value of all stocks listed in India, $5 trillion. Today that value reached 5 trillion. It's certainly a moment to celebrate, but it's also a moment to introspect. There's a lot of interest in the Indian markets. And I don't mean foreign investors. They are expert traders. They know how to navigate tricky situations. I'm talking about ordinary Indian investors, people who are putting their savings in the market. It's a new phenomenon in India. Traditionally, Indians have been wary of the stock market. They think it's too risky and volatile. Instead, they preferred safer options like a bank deposit or gold. But nowadays, that trend is changing. Just look at the number of demat accounts. A quick side note, a demat account is like a special purse. It holds all your shares and securities. If you want to invest in the stock market, you need a demat account. Around 32 million of these accounts, 32 million demat accounts were opened in the last financial year. It was a new record for India. Overall, there are 150 million demat accounts. So Indians are investing more than ever before. There are 2 reasons for that. 1, young Indians are more enthusiastic. They're not happy with meager returns. They like quick money. And 2, buying stocks is now easier than ever. There are so many mobile applications available. You can just download and invest. Now, I know what you're thinking. What's wrong with this? Isn't investing in the market a good thing? Well, yes, it is. Investing is good. But the markets offer a lot more than that. For example, derivatives. These are not shares. These are financial contracts, sort of like an agreement to buy or sell, and it doesn't have to be today. The contract can be for a future date or price. I know it sounds complicated, but just know this. Derivatives are a lot more risky than shares, especially if you're new to it. Indian regulators have done some studies and they found that 90% of the active traders lose their money in derivatives, so the government is spooked.
Any unchecked explosion in retail trading of futures and options can create future challenges, not just for the markets, for the investor sentiment, and also for household finances. Household finances have made a generational shift, which I just explained. We want to safeguard that.
If it's so risky, why are people doing it? Because the reward is equally big. India's derivatives trading is worth $6 trillion. That's a 6-fold increase from 2022. So my point is quite simple. Investing in the markets is good, but don't jump into the deep end. Study the markets, understand how they work, gauge the risks, and get good advice. And that last one is very important, especially in the age of finfluencers. These are influencers who give financial advice. It's quite shady stuff. What if a company has paid an influencer to promote a stock? What if the influencers themselves have bought the stock? What if the advice is just baseless? These are all genuine risks. India's market regulator, SEBI, has cracked down on some of them. A few of them have been fined, others have been barred from the markets, but a lot more needs to be done. The law says only licensed people can give out advice. But here's the problem. Finfluencers or financial influencers do not have offices with boards saying financial advice. They work online. There are thousands of them in India, so finding and regulating them is hard. Nonetheless, SEBI is trying. Reports say they're preparing new rules for social media. The idea is to regulate finfluencers, to make them register before giving advice. It will be a long and drawn-out process. Still, it must be done. More and more Indians are entering the market, so it's important to protect their money, to make sure they know the risks involved. I guess the focus must be on awareness, like creating more advertisements or integrating in school syllabus. If not, people may lose interest and trust in the markets. And amid a boom, that's the last thing you want.
Firstpost reports from the world's 2nd largest continent. Hello, I'm Alison Lagrange. A very warm welcome from Durban, South Africa. We get you the news and the newsmakers from Africa. South Africa goes to the polls on the 29th of May. I will track the election and bring you ground reports. Is it the end of the road for the African National Congress? And will former President Jacob Zuma stage a dramatic comeback? From elections to climate change to innovations and opportunities. As the world's attention shifts, we report from Africa, the heart of the global south. Join me every weekday live on Firstpost.